Astra Microwave, the stock doing well. Easy Trip Planners is the other one which is on our radar. The stock is, of course, on our radar because of the company's revenues. It's absolutely flat right now. The revenues the fourth quarter increased by 41% year on year, and there was a 2% growth in the revenues quarter on quarter as well. The important part during this quarter, the company has recognized an exceptional loss of about 72.4 crores as amounts recoverable from Go Airlines have been written off. So to discuss this and the business performance more, we do have Prashant Pitti, who's the co-founder of the company, joining in. Thanks a lot, Prashant. Always a pleasure speaking with you. Let's talk about the GoAir issue first before we speak about the numbers and the way forward. What's the course of action now that you've taken a 72.5 crore hit on your books already? Receivables have been written off. The case is currently in NCLT, and what we understand is that Nishant also has withdrawn the bid for GoAir.
Correct. So given the chances of recovery, we have actually recognized the write-off, but the case is still under NCLT, and as and when we get the money back, it will be written as a profit back to the company. But at the moment, given the chances and given the auditor's view, we have taken a call of taking this as a one-time exceptional write-off within the company.
Is this the only one that you have, or are there receivables from other players like SpiceJet and others as well?
I mean, they all are operational, right? This was the only one which, stopped being operational since some time. And as per the auditor's view and as per the course, we have taken this as a write-off. This is the only one at the moment.
Okay, fair enough. I know it's difficult to say, but what is the chance of recovery?
So the case is still under NCLT and it's out for the jury, and hence it'd be difficult for me to say. But as I've already shared before, that as the NCLT settles our dues, we will be able to recover them and put them as a profit in the company.
And what prompted Nishant to withdraw the bid?
That's an individual call. That has nothing to do with the matter. So basically, I'm assuming that it is related to certain course of actions which have taken, and also a self-realization on our part that where we are much better off just being an asset-light business model. Anyways, it was from the personal side, it was not from the matter side.
Okay. All right. Can you give us a sense in terms of, the business now? What is the volume target for FY25? The air segment bookings were around 26.1 lakh in Q4. And for FY24, it stood at around 1.1 crores.
So to give a target for FY25 will be slightly difficult, but I would say this, that, we have consistently grown over the period of time. In the last year, we have categorically said that we would basically be more focused on improving the bottom line. And you can clearly see that the company PAT, if you remove this exceptional item, was about 157 crores. While the last year was about 134 crores. And also, if you see that the cash flow turned positive, last year it was about minus 119 crores, and this year it's plus 124 crores. So actually, cash flow, if you compare year on year, has actually increased by 240 odd crores. So there was a lot of efforts on the company side to ensure that the cash flow profitability, the cash flow positivity exists, and the company's bottom line becomes even more stronger. We are expecting that the air segment will continue to grow at 15% CAGR basis for the next 10 years, as there are so many new airports which are coming in. We have almost about 2 crore consumers who visit our website on an annual basis. We look forward to continue to see the growth.
All right. On the growth itself, you said that you are looking at improving your bottom line. Your bottom line, yes, it did improve, but not as much as your top line. So if you look at FY24 itself, while the revenues grew 32%, the EBITDA grew just around 19%, which implied that there was a 400 basis points decline in your margins. So what sort of margins are you guiding for?
I don't think so. It is an implication of declination of margin. There were other expenses as well, which increased. In fact, there was some consolidation which has happened over the period of time. In the last year, I think we have acquired about 4 companies, and the consolidation process also takes time. And hence, you would see that our other expenses or our employee expenses have increased a little bit because of the acquisition purposes as well. The margins did not decline. And in fact, for the last quarter, if you see, the margins have only gone up.
Okay. Well, Prashant, overall, what is your view on the industry? Because I'm sure it's getting quite competitive at this point in time. Yatra has market share of around 9%, online travel agencies between 22 to 24%. What currently is your market share? How competitive is it? Do you have to increase your discounting?
So, as a bootstrap company, we have always been competing against 8 odd players. In fact, some of the players do not exist these days, which existed about 10, 15 years ago. So, and now we are in much better position. Now there's a very strong brand name of EaseMyTrip. We're a listed company. I think things are only getting easier with time and also with the economies of scale. I believe that competition is not a concern in our case. We mostly look inwards and see what are the things which we can do better for the company. And I believe that it's only that the coming times for EaseMyTrip are only getting better and better.
Right. What about this acquisition that you made in Jeevani Hospitality, for a 150-room hotel in Ayodhya city? What's the kind of investment that you're looking at? And is this a one-off, or are you looking to invest more in hotel building?
No, this is just one-off. We do not intend to do asset-heavy businesses. This was very strategic. This is only 400 meters away from Ayodhya Mandir. This will be the closest 5-star which Ayodhya Mandir will have. And EaseMyTrip will get certain exclusivity in selling that particular hotel. And we were getting a great deal. We were along with a great partner who knows how to run it operationally. And that is why we have taken this particular deal. But this is just one-off. EaseMyTrip is concentrated on acquiring asset-light businesses, profitable businesses, and disruptive businesses, just like EaseMyTrip.
And how much are you investing in this?
That number is not disclosed.
Which is what we are asking you to disclose, because 50% is what you're paying for Jeevani Hospitality.
Right. As and when board approves the amount, we will be able to share.
Okay. But what are you anticipating from this 150-room property in Ayodhya?
So it's going to take about 2 to 3 years to basically be live and operational. And the expectation, we have already seen how Banaras has turned around. Varanasi used to see about 20 to 30,000 travelers on daily basis. Now it is almost about 5 lakh travelers on daily basis. So we expect the same kind of momentum for Ayodhya as well. Right now, the current numbers for Ayodhya travel is about 1 lakh on daily basis. I believe that this is going to become a very big, tourism spot for the country. And the expectation is that this particular hotel will generate a lot of demand. And we would want most of these demand to be fulfilled directly by EaseMyTrip.
Okay.
Right.
What is your revenue quickly before we let you go from the other segments, trains, buses, others?
Good that you pointed out. One thing at the time of listing, we did say that we would want to grow our other businesses. And as you can see in this particular year, our hotel segments grew almost by 50%. And our other segment, which is train, holidays, buses and others, grew almost by 66%. So the company is doing fantastically well. Even while improving our bottom line, we were able to grow our non-air businesses with leaps and bounds. And I believe that this momentum will continue with both organic growth and inorganic growth as we are seeing. The company has, just if I can add one more thing, the company sees almost about 2 crore people who visit our website, and the cross promotion becomes very easy. If you are selling flights, these people to basically sell hotels, to sell them buses, to sell them trains is slightly easier, and this is why we would see us to continue grow in this particular sector.
Do you have a target mix for the same? I mean, currently, majority of it comes from air booking. 11.5% came in from, hotels in terms of revenue contribution. What's your target mix going forward?
I think, using both organic and inorganic channel, we would want to see it 75-25 in next couple of years.
Okay, take that point. Thank you so much for joining in and giving us all those views. Wish you good luck for the future, and perhaps you'll answer some more questions when you join us next as well. Prashant, always a pleasure. We'll take a short break, come back, get you more on the markets and get you trading ideas coming from Ruchi Jain of 5paisa.com. The Nifty is surging as we speak.